All right, coming up on the fifth week. So, anyway, today is going to be all about credit. We're going to talk about, just the basics of credit, credit scores, managing your credit, things like that. So, we'll just jump right in. First off, get the slides to roll. There we go. So, accessing and securing your credit. So, again, I differ from most people in terms of most personal finance people's, they really make a big deal about being debt free and not have any loans and not all loans are the same. Home loans, things like that, generally, those can help your financial future. It gives you a chance to invest a little bit earlier into buy an asset that's going to be appreciating, and you can have better outcomes. Now, credit card debt, personal loan debt, that can get completely out of control, and generally you're not purchasing assets that appreciate. So if you're buying cars, you're buying clothes, electronics, stuff like that, ATVs, RVs, the rest of it, those things all just drop like a rock. So again, sometimes you need to use credit to purchase those things, or it can be smart to use credit, but that's what can get dangerous when you get wrapped up in consumer credit type stuff. But for home mortgages and things like that, now that's generally the way things are done. It can actually, if the interest rate in many cases is cheaper than the asset, the underlying asset that's appreciating, you can actually be making money. So anyway, we'll look at it. But in general, if your credit is if you've got too many loans out there and you can't keep up, it can be very destructive. But it's not all the same. So credit, funds provided by a creditor. So that's a person loaning you the money to the borrower. Types of credit: non-installment credit, installment credit. So a couple classes there. Installment credit would be, non-installment credit is like a credit card, right? You can pay a little bit. You can maybe skip a payment. You can pay it all off. As opposed to installment credit, which is like a house, like a car generally. You can't just say, well, I'm going to pay a little bit on the house this month. No, you need to pay, the mortgage amount. You can sometimes pay more if you want, but again, the wisdom of that, I don't necessarily do that. A lot of people are big on 15-year mortgages. I don't. I always do 30-year mortgages, and if I'm inclined to want to pay it off quicker, then I just double up the payments. But you can always revert back to the 30 if things don't turn out the way they are. The day I'm recording this, huge market fall influenced by China. China's having definitely some issues. The Chinese system, the breed, the blending of communist kind of control and capitalism it can lead to some strange situations. So their real estate situation is very strange, with a lot of money outstanding. So we'll see what happens there, but it is affecting the U.S. market today. But anyway, I haven't had anything to sell. I've got everything I have is programmed to sell if the assets drop by more than 13%. And so so far I'm doing fine. We'll see what happens by the end of the day or tomorrow perhaps, but never know. But the worst that happens is I can always buy back in, or maybe it drops a long ways and then I buy back in for lesser. So you have to stay kind of flexible. Okay, so background on credit. Revolving open-ended credit. So another kind of a modification of that same thing. Specified maximum based on income, credit history. So when you're looking at a credit card, they'll perhaps put a limit on you. It's a funny thing. One time I asked to have the limit reduced on one of my credit cards, and they just couldn't do it. I said, this is, ridiculous to have this credit card with, I don't know, it's like a $30,000 limit or something. I'm like, there's no foreseeable world am I going to be doing that. But anyway, most people want their limit increased, and But anyway, they'll set those limits, based upon your your situation. The funny thing is though, like on my business credit card, I have a pretty low limit, and they kind of refuse to lift it because it's associated with the business. They'd rather have a much higher limit on my personal account, feeling that they can go after me on a personal basis as opposed to the business, which is under an LLC. So maybe there's some wisdom to them, but I don't like to have that many credit cards. But anyway, the advantage of using credit helps build a good credit score, eliminates the need for carrying cash. So the second one I definitely agree with. Credit score is important, but it's not everything. Don't subscribe to something to inflate your credit score to try and get it up where I don't know. There's just some weird things going on in some of the .com kind of credit things to help you improve your credit score. And generally, your credit score will take care of itself if you just pay your bills on time, and you can generally, if you've got a good credit score, say 750 or above, you're going to have the best credit available, and there's no need to become obsessed with trying to increase it. Pardon me. Okay. Disadvantages of using credit. Yep. Excessive spending. Yep. People tend to, like I say, when I've sold a number of products, like retail type stuff, like mainly related to horses and livestock and stuff like that. But, I'll kind of size up the person who's purchasing. And I really don't like to take credit cards because I have to pay 3%. So, if you're selling something for $3,000, I'm losing $90. Whereas if the person writes me a check, I keep that $90. But you'll get a feeling from talking to the people whether, a lot of times if you say, oh, I take credit cards, they'll tend to, oh, then I'll just go ahead and get more. So I end up making more because they buy more stuff, because it's just the psychology where people don't consider it real money. Whereas if they're paying cash, they're going to buy just the bare minimum a lot of times. So, stores or retailers know this. Some people will pass on that charge. They'll say you can use a credit card, but we're going to have to charge you that convenience fee or whatever they want to call it, 3%. They're just trying to get reimbursed for that credit card fee, but most consumers kind of object to that because I don't know. I don't like to pay it, and I'll usually, if they're going to put me in that kind of situation, I'll pay by a check, I'll pay by a debit card, and I'll try to avoid that convenience fee, because if you think the miles are going to make up for it, no, they're not. You're not getting that many miles. And so large accumulation of debt. Yeah, it can insidiously just get out of control. And if you're making minimum payments, you're leaving a balance out there, and it's accruing interest for them. So all those examples we did about compound interest, how it just, the magic of compound interest, how it can just explode your savings. Well, it can also explode your debt if you're not paying. And the amount that the credit card companies charge, again, we talked about, them being located in states where it's legal to charge rates like that, where it's not considered usury. Anyway, they can charge, up into the 20s, and that can get out of control in a hurry. So credit rights, these laws come up all the time, but you gotta use your own judgment. The government's going to look out for you to a certain extent, but a lot of times they're in it with the big banks, so they're not always your friend on this. That being said, though, there are some things in terms of greater protections with credit cards than over debit cards in many cases. You have to read the individual statements, but a lot of the provisions on credit cards where they can't screw you on certain things are written in the law, whereas in debit cards, it's just a bank-by-bank policy, so it's not codified. And then the credit rating bureaus. So there's 3 big ones out there, and yeah, they have certain regulations on what those guys can and can't do. For example, if they have some bogus information in there, you can dispute it, and the thing just goes away for about 30 days or so while it's under protest. or you can put a note in there if you want, you know. Um, anyway, I'm not sure any of that helps you. Most people, you know, most creditors don't have time to read your note about, oh, I had some sort of illness or something. I mean, I'm not disputing the fact that that's, you know, a mitigating circumstance, but in reality, they're probably just going to go with a score. But we'll look a little bit at credit bureaus in this discussion. So here's how people with no use of credit, savings, payments on credit, spending, and somebody who doesn't have credit. But for example, getting back to that house example, if you wait till you're in a position to pay cash for a home, you know, that ship has kind of sailed. The real estate's going up pretty fast. And if you're saving for a home, let's say, you know, your dream home right now is $500,000 and you've got $250,000 and you want to, you know, wait and save for that. And let's say, you know, it takes you whatever, another 10 years to get that extra $250,000, and that's pretty aggressive. You're putting away $25,000 a year in savings. Anyway, by the time you do that, that dream home's going to be over $1 million. And you started out $250,000 behind, and now you're $500,000 behind. So, you know, you're going to be basically a renter for life. So it's a tough go. The other thing is too, with housing appreciation, it doesn't really. I mean, some of you may already own property and go, "Wow, this is great. Housing's going way up," and I mean, it's good that you're in the market, but it's bad that you're you know, that inflation's taking place to the rate it is. Again, looking at that example, let's say you buy that $250,000 home and your home appreciates to $500,000. Well, that same dream home you wanted, you know, the next step up, the one that was $500,000 is now $1 million. So you're behind. You're in a better position than the person who's not in the market, but you're not in a great position. So, credit history. So, easy things, you know, just paying the bills on time. And again, they're not, the credit bureaus don't get involved. If you're like one payment late or whatever, that doesn't, when you look at your credit report, that won't be noted. But if you default on something or it goes out to collection means what happens is, let's say you're a credit card company or a utility or something, you're going to have a credit department that's going to, you know, do some threatening stuff, you know, maybe send out a letter or disconnect their service or whatever. But when it gets right down to it, you know, you don't have the resources to actually go out and try and start repossessing things. So what they will do though is, let's say you owe $500 to a company, that credit company, you know, the company that's owed the money, will say, well, we're not going to get this, so we'll sell this to some sort of debt collector, some dog the bounty hunter type guy, and we'll sell, you know, the fact that you owe $500, and we'll sell that for, you know, $100 or $50 or whatever. We'll get something out of it. And then the guy who buys it, that collection agency who buys it, they're entitled to that whole $500. Good luck getting it, but they've at least got the resources, and that's their job. They'll go out there and they'll hound you and they'll do other stuff, and with the hope of collecting, you know, that $500 or a big chunk of it. So that's why they get more aggressive. Anyway, if it's gotten to that point where it's been sold off to one of these third-party debt collectors, yeah, it's going to be flagged on your credit, and that will probably be the end of your getting credit for a bit of a while. Anyway, credit insurance. This isn't a scam, but it's the way it's presented is kind of disingenuous. Let's say you're getting a credit card or a mortgage or something. They're saying, wow, you know, we appreciate you so much as a customer. We're going to give you credit life insurance. So in the event you die, you know, your spouse or your partner or your state won't have to worry about it. We're going to pay off that loan in full for you. You know, in reality, it does work out that way. But the reason they're doing it is because they don't want to be, you know, at some gravesite, you know, in a tug of war with some grieving spouse trying to get their, you know, mortgage money. No, they'll take out an insurance policy, which you are indirectly paying for, And that life insurance policy will equate to the amount of your mortgage. So if you die, well, they're not too awful upset about it. They collect on that insurance policy, your loan's done, and they send the beneficiary the note now that it's paid off. So, it kind of works out for both people, but it's not as they present it that they're, showing some sort of compassion. They're trying to avoid a hassle. So anyway, credit bureaus. Yep, three big ones. Private agencies. They have different formulas, different algorithms, whatever, where they come up with a score. The scores will differ amongst things. These guys have gotten a little bit more high profile lately. They see themselves as, well, people are obsessed with credit scores, so they realize they can get people to pay for it, people to buy the credit score. And that is the case. You cannot get your credit score for free typically. Now you may be able to get it through your bank or somebody else, but they're paying a small fee to the subscription to the credit bureau to get that. What you can get though for free by law is access to your credit report. Now it won't actually have that number in there, but you can kind of infer from the number. I mean, if you've got a bunch of outstanding things on there, yeah, you don't expect your credit score to be very high, but it's pretty useful to look at that and see. A lot of times too, you'll get the credit report and you go, oh man, I forgot I even had that credit card, or you signed up for some promotional thing and they issued a credit card in your name. Now sometimes it takes a bit of detective work to figure it out. Like let's say you've got a credit card with Gap or Kohl's or somebody like that, Old Navy. It's not going to show up typically as one of those big retailers in the name. It'll say Citibank or some obscure bank you haven't heard of, but they're the ones who do the credit cards for that particular entity. So once you figure out, you may say, oh yeah, that is a credit card I need. And the truth is, if you're going to do business with some of those stores, I don't shop at Kohl's, but I do know that if you were to do that, the only way you can get a reasonable deal is, at least this is how it was a few years ago when I did go there, was that you had to have their credit card to, get the deals. Cabela's to a certain extent, I've done that as well, but there's no harm in canceling those things. I have probably got and canceled the Home Depot card 7-8 times, because if you're, they're going to give you 15% off on that first day's purchase plus 10% plus all this other stuff. And if I'm going to buy something big, I'll make sure first off I don't have the credit card, or I canceled it like 6 months ago. It needs to elapse for a while. But yeah, if I'm going to buy something big, I'll say, hey, I think I'm going to get the credit card. And, they're, falling all over themselves to get you the little online application. And, they give you all these discounts that apply to that first purchase. And then, you pay it off and you cancel the card. And you're all teed up again for, another year down the road when you need to do it. Granted, it generates a little bit of work, but, if you're buying an item that's worth a couple $1,000, it's kind of worth it in my mind to do it. Anyway, up to you. But anyway, they don't necessarily give you those perks. Well, they don't give you those perks if you're already existing member. So you got to remember to cancel that thing so you can be, fresh again when you got that next purchase. Okay, so the big guys, Equifax, Experian, and Trans Union, and you'll see those names. You may have heard of them. So this free credit report annually, again, that's the one that's not going to have a score associated with it, because that's proprietary information and they can sell that to you legally. But anyway, you go through the government website. You don't go like a free credit score, because if you do that, you're going to inevitably sign up for some subscription that's not going to be free at all. You're going to have a credit card, it's going to be a free trial, and they're going to make it hard to cancel, and you're going to get screwed. So don't do that. But if you do want the one, you go to the FTC site, which I'll show you in a second, and you go on there and you answer some questions that are pretty difficult, depending on your past. I'm divorced, and they've got all kinds of information from my ex who I don't know, and they're asking me what street I lived on. I'm like, I never ever was there. And anyway, for some reason they get the info all confused. So go figure. And these are the people who can't keep track of data who are also doing your credit score. So not the best system out there. But anyway, let's say you can get through those questions. You can get your free credit report. Now, because there's 3 of them, each one of them would have to give you your free credit score. So if you're, obsessed about, and maybe you've got an issue, maybe you really want to, check that thing continually, you can check it 3 times a year for free. Or another way to get it checked is apply for something and be denied. And this is really a good time to check it, because if you apply for a credit card and you're just average, you probably should get that card. I mean, as long as you've got some sort of job, credit history, whatever. If you get denied, you probably want to get on there and say, hey, I want to get a copy of my credit report to figure out why I was denied. And so, yeah, you can get another one from them. So, yep, bunch of information, potentially negative information. I haven't found so much negative information in terms of, that's not mine. And I don't have any negative information myself. But anyway, but it's it ends up being like 17 pages of stuff. But all you want is just all these lines that say, yeah, no data, or nothing bad report, or paid in full, or something like that. You'll be surprised. It has a lot of data out there. Accounts turn over to collection agencies. So generally, if you're behind a couple bills, but it's been kept, between you and the utility company, that's probably not going to be reported. But I'm not saying to do that, but don't be too worried about, bouncing a single check and expecting that to show up on your credit report. It probably will not. But all those closed accounts. So yeah, I've got probably 2 pages of Home Depot, opening and closing, but I've saved hundreds and hundreds of dollars doing that. So screw them. List of companies that requested your credit report. So this usually coincides to your junk mail. When you get all this crap about mortgage refinancing and this and that, you can pretty much look at those people, because they pull your credit score, and if it's good, they'll start hammering you with junk mail. So can't really control it. But anyway, when they request your credit, they do so in bulk, and so they probably get a pretty good price on it. But they've kind of pre-qualified you. So here's a sample credit report. I'm not going to show you my own just because it's got all kinds of pseudo personal stuff, but it's going to have stuff on it that would be exceedingly useful to somebody who want to do identity theft. So yeah, if you print one out and do not hand it in, right? On the assignment here, it talks about, getting a copy of a credit report, but I'm pretty explicit to not email that to me or do anything like that. But it is worthwhile that you get in there and you figure out how to access it and the rest of that. So anyway, paid as agreed. Now this one paid 120 days. So typically you don't see things like that. But this guy's dealing with some Chester Auto Finance. So if you're dealing with some auto finance, third party kind of person, maybe you got issues already going in. There's a Home Depot after my own heart. Anyway, credit score. So credit score, this is something that they really try to make a big deal out of. Why? Because they can sell you that information. So they want you to, really want to know what your credit score is so that you pay them to obtain it. Or you give away, some Credit Karma thing where you give away a ton of personal information to get it. Fair enough. Most of your banks, most of your credit card companies will somehow have, ability for you to access your credit score and let them pay for the subscription. But anyway, creditors rely on the score to help determine whether or not to extend a loan. Yep. And it can affect the interest rate. So you'll see a lot of times with, something that's like a great interest rate and it says, for qualified buyers or whatever. That means it's somebody with a great credit score. And then conversely, you also, see auto places say, we loan to everybody. Well, that's not for you. You're not by loaning to everybody, they're accepting a lot of people that are going to default on loans, which makes their business practices much higher, which means they got to pass on those costs to people like you who pay your bills. They got to pass on the cost of all those people who they issued credit to who didn't pay their bills. So don't think about that. These are approximations. The credit bureaus can use whatever numbers they want. They're selling a service. So, they want their numbers to be accurate. They want their scores to reflect the ability of somebody to pay back a loan. But what particular numbers they use in here are up to them. Yet they don't all have access. So you can have different scores amongst different things. And there's weird things that will affect it. For example, I did this one time. I was looking to buy a big piece of equipment, and I was shopping around trying to get the best loan. And so I talked to numerous different lenders. And, all of a sudden, I actually had a home mortgage with one company, and they reached out to me and they said, what's going on with your credit? Why are you, soliciting all these loans? And can we help you with this loan and all this? It just makes them nervous because they think I'm taking out a bunch of loans in a bunch of different places. So let's say you're out looking for a car, and you start early in the morning, your credit score's, 750 or something, and you go to 3 different dealerships, and, they always want to make it seem more, get you closer to actually signing. So they're saying, well, let's run your credit. Let's have you talk to our finance guy. And they run your credit. After you've done that about 3 times, your credit score in real time is going to drop, 30 to 50 points. And it's going to take a little while to recover because they're assuming that you're taking out multiple loans at multiple places. So I don't, even if they, are willing to pay for it, I don't typically do that. If you want to have a credit thing done, like let's say you're going to pre-qualify it for a home, well, then you pick, one lender and you go to them, and typically that's on you. You pay $50 or whatever to get your credit ran. But if it's just a one-off, it's not going to affect your credit score. But if you did that at multiple mortgage lenders, number one, you'd be stupid because you're paying $50 a time each time. But it would affect your credit score as well. So anyway. So 350 to 850, 600 being a good score. Yeah. So I don't know. I mean, I'm not going to, whatever. I don't think my score ever goes below 700, but it's not like it, once you hit a certain level, and I don't know if 600 it is, I'm thinking it'd be a little higher, but anyway, it just doesn't matter whether you got a 700 to an 850, you're good, and that's all you really need to do. Now, if you see something, because they try to get your attention, your credit score has dropped, I guess you should explore it, just because there might be some identity theft kind of thing going on. But if it's a rational thing where you just bought something or whatever, then I wouldn't stress over it too much. Correcting mistakes. So yeah, they have to investigate that stuff, but you have to find it. You have to go on there and look at the credit report. Improving your score. Destroy credit cards but keep account open. I mean, they're that might work. I mean, they're saying it here, but each credit bureau is on their own. They can set whatever rules they want, and they don't necessarily share them with you. But that last part about calling creditors if unable to make payments on time, that's huge. You should always do that. If you think you can ignore these people and they'll just go away, they won't. It just makes the situation far worse. Now, what you can do, like let's say it's a credit card, and you're stressing and it's not going away and it's just racking up. Call the credit card company. The credit card company, they want to get their money back. They don't want to sell it to a bill collector because they're going to get pennies on the dollar. They're not going to get much. So they're willing to work with you, and to the extent where they even have their own credit counseling type thing. And they may, say, okay, we don't want you to have this credit card anymore. And what we're going to do is we're going to convert this loan to just a regular fixed payment, type loan. And we'll help you get things back on track. And the interest rate should be considerably lower. So anyway, that's far different than going on to some, shyster.com, fix your credit kind of thing. Those people, they're just going to end up being another bill on your credit card when you're paying for these credit restoration services. Now, deal with the credit card company themselves and let them, refer you. I know it sounds kind of counterintuitive, but those third-party people who make it look like, oh, you can get away without paying or even declare bankruptcy, that is not a good way of doing it. Not going to work. Okay. Reviewing your credit report. So twice a year, yep, if you want. Review the types of information, see what information. So again, yeah, it is kind of an educational thing. Rather than look at, keeping old credit cards open or something like that, look at the credit report itself and see what the negative information that's on there, and then you'll know. And you'll also see, that, oh yeah, I was late on my whatever payment, and it's not reflected here. So yeah, that didn't hit the threshold, or you'll see what causes what. This is what they're showing. So yeah, when they're saying 600, I mean, that's really, you're not even in the upper half by that point. So you can see that where I was talking 700 is probably the upper half, and that's probably where you're going to be able to get the best loan. So that would be the goal that I would shoot for, because 1327, that's what, 40. Yep. So anyway, about 50% margin is up there. So ftc.gov. We'll give this a quick try real quick, see if the internet's working for us. So this is their whole thing. So this is definitely a .gov website. No .com anywhere here. Report identity theft. Get your free credit report. Okay, now what they're going to say, they're going to give me a disclaimer saying, okay, we're going to take you to another site. Don't panic. Here's a video. What should I do? How to get it? How to order it? Is it annual credit report? So now you're being referred to a .com, but it was off the FTC website. And here you go. So, they don't necessarily like, the credit agencies don't like giving the information away for free, but per, government mandate, they have to. And so, they all contribute some money, and got different options, and off you go. You're getting your free credit report. Now, if you just go like this, you go free. I'm typing on the slant here, so apologize. You're going to get all kinds of, pseudo free stuff, but it's going to be mainly, 100%. Oh yeah, Credit Search, Trans Union, Experian. So you can see the big boys themselves. They want to hook you up, but they're even advertising. I mean, obviously they're not doing something for free if they're advertising it. Annual credit report. Anyway, you might be able to find your way back to that actual government site, but not a high probability for that. And if it is free, it's probably free for just a short time, and then you get, other things. So Credit Karma, most websites have a kind of a shelf life. They turn out, initially really good, and then they get more and more influence. I'm not sure where Credit Karma is on that continuum right now, but from what I've heard, they get a bunch of your personal information, and then they pass that on to the people. So, it's technically free, but if it's free, then you're kind of the product. You're not getting the service. You are the one that's being sold. You're being sold to the other folks. So anyway, identity theft happens quite a bit. Things are better. I mean, if you have the access to two-factor authentication and some of the new type things, but and most of this now is not the dumpster divers, because there's typically not much information on paper statements, and most people get that stuff electronically. But yeah, it changes all the time. So can't really give you a good overview of identity theft because it's out of date the minute it's spoken. It's like a computer virus where it changes all the time. Lots of things. Yep. But I've had identity theft so many times. I mean, I'll get some strange charges on the credit card, or I'll get a warning from the credit card, and sure enough, no, I did not, spend $600 at whatever strange place, and yeah, it's just a hassle. You got to close that credit card. You got to wait a week to get the new one, or a couple days actually, if you insist upon it. And anyway, but you get it back. I've always have, but if you let it go, if you're not monitoring it, if it goes over 30 days, yeah, you're screwed. So this stuff, these guys are old school. This is not necessarily happening so much anymore. Most thieves have moved on and do everything electronically. Skimming, that certainly happens. Or this happens in, well, all these bogus text messages you get that may, lend you into something, or they need your password and they set up spoof sites. Yeah, skimming, we'll talk more about that, but they want basically the numbers and the magnetic information. Phishing, you are more familiar with that than the authors, I guarantee you. Crime rings, they are operated by crime rings. Violating your mailbox, again, very little good information is coming via the mailbox anymore, so most of this is done digitally. Protecting yourself, the way you protect yourself is you check your accounts and you notice, fraud type things. Also, having, like I said, the two accounts, one account that's like the checking account with a lot of volume, and then any of your savings or higher amounts are often some other account with reduced access and fewer transactions, and so it's more obvious if something's happened. So if you do get hit, it's typically on your checking account, and you can get it resolved if you catch it on a timely basis. So credit card companies are so happy to deal with you if you call them, almost immediately. You let it go a couple days, it's a little more difficult because now they've paid off the merchant. If somebody pays me via credit card, it takes a couple, 3 days before I get that money. Well, in those couple, 3 days, if you report it as fraud, the credit card company hasn't paid it out. And so, yeah, it's no big deal to them to cut it off. If you let it go 30 days, their attitude completely changes. No, they know that they aren't required now to make good on it. So anyway, it's about monitoring stuff and being timely. Yeah, all sites are pretty much secured anymore. Not that buys you that much. And again, this is all old school stuff. Yep. Again, we're living in a little bit more of a digital world than these guys realize. Identity theft insurance. I don't know. A number of times information of mine's been hacked through one system or another, and you get a email from the company that let your data go, saying that we're enrolling you at no charge into some identity theft insurance program. And I don't think those guys are. I've never got a dime from them, but I haven't necessarily been ripped off. But they usually will alert me of some mysterious credit thing that's like weeks old. They're not, I don't think, as good as the actual credit card companies themselves. Take immediate action, certainly. Contact the police, which sounds silly, but you actually have to kind of do it. But the police don't want to talk to you any more than you want to talk to them. It's a scam. One time, somehow a lady was down in Florida, was debiting my savings account because I had a savings account with a bank from a long time ago. She was debiting it to pay her cable bill, and I don't know how she ended up with the number, but anyway, just kept hammering the savings account that had like $200 in it. And I think her bill was 50 or 60 bucks or whatever. So did that about 3 or 4 times. And then it started rolling onto my credit card as an overdraft, which I didn't even know was a thing, that you had an overdraft on a savings account. But anyway, it took me a while to get this whole thing resolved, and I got it back. But one of the conditions of the stupid bank was that I get a police report filed, and this happened in Florida. Anyway, I go down to APD, and I think I paid him $15 and stood there in the lobby and got some police report. It was the biggest waste of time. It was the Big Lebowski all over again. The boys of the crime lab do not care about your credit. You are on your own. So anyway, but yeah, you will find often that they require a police report. Contact the FTC. So that's about as useful as contacting the police as well. But anyway, credit reporting agencies, if it's a big thing, yeah, to let them know. But expect your credit cards not to work now, because if there's fraud reported on your accounts, they're not going to work for you either. And then contact your creditors. So you should contact those folks, but don't expect it to be resolved by them. We're going backwards. Sorry. Okay, so here's a couple different agencies: Equifax, Experian, and Trans Union. So the big three again. So that's just kind of a quick overview. So what I would do is I would go in there, just as, that FTC Gov thing, see if you can answer the questions. Hopefully you've got a simple life, without a bunch of drama, and you can answer all the questions. It's just going to ask you previous addresses and simple information that should be simple for you if it's indeed your own information. And then just go through there and see what's written about you, and then do that on a semi-routine basis. So managing your credit. So kind of repetitive here. Yeah, I like credit cards because it gives me a record, and that monthly statement for record keeping. I have a few businesses, and just about everything I do is a business expense, so it makes it quite easy to keep that. And that second bullet about free financing, if you're a convenience user, if you pay the bill every month, yeah, there is no finance charge. So, the only thing you get from that account is the miles. Now, whether you're, granted, you got to pay a annual fee to some of those cards that give you the miles, but as long as it's not exorbitant and you're getting more value out of the miles, then good on you. Disadvantages. It's all about excessive spending. So that's true. Credit cards. So again, time, value, money working against you rather than for you. Applying for a credit card. Yep. They typically, especially like a Home Depot type thing, how much do you make? Do you own your home? And then what's your social? And so with those three things, they go in there and they pretty much got everything they want. The reason they want to know about your income and that is because that's more timely. The credit report stuff may be, days, weeks old. They want to know if you just quit. And if you lie on that, then, perhaps they have some recourse. Credit check. Yeah. Types of credit cards. So the true credit cards are, MasterCard and Visa, maybe a few others, but American Express, sometimes they require that payment in full. Plus they charge an extra bit onto the merchants. Typically they're up into the 4%. So most merchants, like myself, I don't take American Express, and I don't lose any sales over it. So American Express is kind of a status thing. And again, there may be certain reasons to have it, but there's none in my mind. Proprietary cards, sometimes you need those for certain, to get, better deals at certain stores, but I don't think those are common. I remember my parents had, credit cards for all these different stores. Now most everybody's got it rolled into one. And even proprietary ones like, I don't know what it's Gap or Old Navy or whatever. It's just a Citibank card. And some of the other ones are just, American Airlines is just a Bank of America card. So credit limit, overdraft protection. So we talked about that. Credit limit, you can't charge any more than that. Overdraft. And again, if you're going to bump up against the credit limit, just call the bank and say, hey, I need to buy this. I've got something going on, and they'll go through their approval. They act like they're off doing something. They get back on the phone and, oh, okay, yes, it's approved. Whatever. It's better than pushing up against the limit and having it declined. So incentives. So some of the incentives are good, like the miles perhaps, but not all miles are miles. Believe me, I've done that a number of times where they'll give you 50,000 or 70,000 free miles, and you find out that 70,000 won't even get you to Seattle. So it's there's not a one for one. Not all miles are interchangeable. But the prestige ones, it's like, anyway, if that's how you're getting. Now, if it had something like getting into some of those airport clubs, that's a perk that might be worth having. But most of those other perks, I had one that was really cool. It was one of these ones where I got 70,000 miles, and it was this metal card. It was just neat, but it was the miles were freaking worthless, so I dumped it. Anyway, grace period. So this is how to get that convenience charge. There's a certain length of time between when you purchase it and the credit card closing date. That's typically each agreement may vary slightly, but get it paid when that payment's done. The interest rate, I couldn't even tell you what the interest rate is on the credit cards I have because I don't let them go. If it's got a low interest rate, it's probably got a low, perk rate, a low miles rate, a low whatever. So there's always trade-offs. The credit card companies, they're going to make their money one way or another. So you're very rarely going to find one that has very low interest and, very good perks. So, the credit cards are kind of predatory. If it's something, with great amounts of miles and everything else to entice you in, they're probably going to have a high interest rate. And but that's for the people, the schlubs who get stuck having to pay that interest rate. So don't do that. Cash advances, yeah, don't do that. So what happens with cash advances are that grace period is out. You are charged interest from the first day, and you're even charged a fee to even use it. So if you screw up somehow and you want to use your ATM and you grab the wrong card and use your credit card, it's going to be painful. The way I found this out was somebody did get in my mailbox, and this was a couple years ago when they'd send you those silly convenience checks. It looks like a check, and they're trying to get you to use it. And if you do, which I found out only because somebody got one of those and they wrote like a $300 check, and I noticed because I had $320, instantly show up on my credit card. $20 of that was a convenience fee, that you just paid to the credit card company for getting the cash advance. And then the interest started accruing right then. But anyway, once I got it all unwound, I got all my money back. But yeah, anyway, I get everything paperless now. So for most people, that's a pretty good way to do it. Because by the time you get the paper statement to review it, it's usually, the credit card companies are kind of in that angry phase if you take it to them and it's already been paid by them. You're better off to look at the online version, once in a while. Financial charge, yep, average daily balance. So anyway, they have different ways they can do this, charge the interest, but pay it off within the billing cycle, and you don't have to worry about these things. Adjusted balance. So they're figuring out how much interest they can charge you, based upon what your balance amount is. Estimating credit repayment. So yeah, it's APR. It's going to be compounded daily against you. So impact of the interest rate. So it works exactly the same as savings. So it is going to rack up in a hurry. And they're just showing some things here. So they're using simple interest, which is normally it's going to be compounded. But anyway, quickly, the amount of your interest will, you see something on sale and you say, wow, I'm going to buy it now. I'll just put it on the card because it's such a great deal. Well, it's not such a great deal if you don't pay off the credit card and the interest starts to accrue on it. the interest is way more than the amount you spent initially for the item. And again, so the statements, but most people typically get these. So when I get a statement, first thing I look at is the finance charge. I want to make sure that that's zero, that there is no finance charge. And, then you start going back through. So, when the thing is electronically delivered, that's what I'm looking at. And then, I'll go through and I'll look at the items themselves. And it's a pretty quick scan if you know what you're looking for. If you're used to, let's say you go to the same store, it may be kind of cryptic at first, but once you realize, oh, that equates to the grocery store I shop at, and you see that over and over again, then you know. Customer service number, they tend to like to do things in chat or in email or whatever. And I kind of prefer that as well. I often prefer email. If you really want to get impact, man, you go old school and write a letter, because they just don't get letters much anymore. But for disputes, yeah, you definitely do that online. But don't be afraid to screenshot or do whatever to build up a record. Phone call is probably the worst because, number one, you spend so much time on hold, and then you don't have any record of that conversation. So, credit card acts. So there's always going to be different acts coming through and always different, modifications. Sometimes they help you, sometimes they don't. Again, the state of Delaware, MBNA, all these credit card companies that came out of there. It's kind of the wolves guarding the hen house right now. So, huge backlog of, trying to file complaints with the government agencies, but it's more sweeping type stuff. They typically can't engage on your individual case, but they can try to set the policy for, bigger issues. So, yeah, it's really tough to make as much money in the market as credit card interest. So, if you say, okay, I'm going to be disciplined, I'm going to start investing. If you don't have your credit cards paid off, then no, you need to get your priorities. You need to pay off the credit cards and then start investing. Pay off credit card debt before other debt. Yep. But a home, I'm not, even when I have the opportunity to pay something off, with the interest rates now, doesn't make much sense. And the credit repair services, those guys are literally, they will show up as another bill. Now, contacting the credit card companies themselves, like I said, that's not a bad thing to do. That's the way it should be done. And get out from under that huge interest rate they're charging you. I mean, they have huge interest rates because they're exposed to quite a bit of risk. Because you can go out there and continue to charge and do some other things. If they close that credit card down and they just have a simple personal loan to you, they can do so with less risk exposure, and that equates to a lower interest rate for you. Okay. Resolving excessive credit, spend as little as possible, consider ways to increase borrowing money from people, debt consolidation. The credit card companies will do that for you, sell assets for cash. So this person's, getting down there. Really, this reducing everyday expenses, this gets back to, not taking out loans for a whole bunch of things. If you get yourself in a scrap and you've got all these little loans for, vehicles and recreational items and silly stuff, yeah, it's going to be hard to get out of that hole. But if you manage yourself where you don't have a bunch of excessive debt, then you can reduce everyday expenses quite quickly. If your everyday, if you only have $50 left at the, discretionary income at the end of the month, that's going to be a tough hole to dig out of. Personal bankruptcy. So yeah, bankruptcy is a thing. They've made it harder to declare bankruptcy, But what you basically do when you're declaring bankruptcy is you go to the judge, you go to the court and say, yeah, I'm not good with money, and you need to manage it for me. And you know, in many cases, if they do this, yeah, they've taken over control. You have to provide a list of assets, and they'll tell you what you get to keep, based upon what they think is important. And so, yeah, you've given up quite a bit of freedom, and some of your stuff may be sold, and you don't have much, whatever, because you've let them, you've ceded control. That's chapter 7 is the typical one for that. And then chapter 13 is more of like a wage earner type thing where, if you, in bankruptcy, you're able to kind of walk away from your debts, which screws the creditors. So that's not necessarily fair, especially if you've got a job. So you may go in there thinking you're going to get chapter 7, but they may say, no, you're not going to just stiff all these people. You're going to pay them back. You're going to pay them back over time. So, that may be a chapter 13 type thing. But anyway, it's your financial future is you're in bad shape, because when now people go to pull your credit score, there's just going to be an absence of information which conveys that, oh, this person had a bankruptcy, and so yeah, your credit score is going to be subterranean. It's going to be, you're not going to be getting loans. And when you don't have credit, things get very expensive. It's very expensive to be poor. It's very expensive not to be able to, do things without a credit card. They make it difficult, and they make it more expensive. So, good luck trying to fly somewhere. Good luck trying to rent a car, get a hotel. Without a credit card, it's going to be hard. So it's not a, you're not necessarily getting something for free here. You're going to pay. Anyway. And they've made it more and more difficult to file bankruptcy. Now, there are certain cases, well, the majority of these cases have to do with medical issues, where either insurance is unattainable or unaffordable. So, I mean, there are people with bad credit are not, necessarily bad people. There's a lot of people get into it through, good intentions. And if you got some family member that's struggling and money is the only issue to make them well, you're going to do what you need to do. But anyway, hopefully, I've never been to bankruptcy court, but hopefully they'll show a little bit of compassion to you. But anyway, try to avoid that at all cost. But this is where we live. Key management decisions for your financial plan. So anyway, when should I use my credit card? So anyway, make sure you're in control is my best thing. Best advice is that credit cards can get you some great deals. They can, alleviate the need to carry a bunch of money. They can give you great record keeping. They can provide some budgeting because you know exactly where all your money went. But yeah, they can also turn against you. So retrieve your credit report. Do not turn it in. This is for personal stuff. I mean, I think that makes it pretty clear. But and it's not that hard to get. It's just with me, and maybe your own situation, and I'm sure for whatever, if you've got a marriage and maiden names and all that other stuff, that my situation may be easy compared to yours. So see what's in there, but it's worth definitely looking at. And then just chapter 8, page 229, problem 6. Alrighty then, till next week.